Hello, hello, hello. Good. Happy Thursday, everyone. Good morning. How is everyone doing? Good morning, Patrick. Good morning, Options 22. Good morning, George. George thinks more red dead ahead. So, all right. Fed meeting out of the way. We got ISM on deck next. And then we have non-farm payrolls tomorrow. And then we have an election next week. So we are then CPI numbers. We are not out of the woods yet. Good morning, Connor. So I hope everyone had a fantastic evening and a good morning so far. We've had some earnings come out, but first, let's just get right down to it. If you are new here, please do consider subscribing, ringing that bell, and hitting the like button. All right. So, where else? Good morning, Sterling. Let's get some capitulation, please. Capitulation levels are much, much lower. Way lower. We'd have to have a bloodbath over the next few days. Could happen, yeah. But they're way lower, Sterling. Way below the lows of the prior lows in October. So we're nowhere near that yet. Let's see what we had. We had initial jobless claims coming in slightly better, continuing jobless claims coming in slightly worse. So sort of a mixed bag. That was minor this morning in the overall backdrop at 8:45, 15 minutes after the open. We have the S&P composite PMIs and the services PMIs. Watch to see how they react. If they get closer to 50, remember 50 is above 50 is expansionary. If there's a big miss, remember the S&P, the small and medium firms have been doing worse than the larger firms, which is the ISM. Coming out 15 minutes later, that's still forecast in pretty decent expansion at 55.5. The only thing the markets will be looking to is if that contracts severely lower. Why? Again, we'll still have, they're only going to do 50 in December. Or, I mean, this 25's off the radar screen at the moment. Also, pay attention to ISM non-manufacturing employment and the prices. All right, so that's 9 a.m. So 8:45 and 9 a.m. do not get caught off guard. Other than that, the rest of the day is quiet. We did have the Bank of England hike 75 basis points this morning. So that's also what was going on. Grand Rising, Christoph. Christoph wants 365. And I hope, what are you talking, the spiders? I assume. Good morning, Anissa. I'm okay with the much, much lower. Let's just get there already. You just want the flush out move so we can get to a little more stable bottom already. Good morning, John. Why the market didn't want to capitulate? What do you mean why the market didn't want to capitulate? Capitulate's where everything throws in the towel. There's too much on deck to capitulate just yet. There's not going to be a capitulation ahead of the election either. Well, it could be one post-election. Hey, Waka Waka. Yeah, it's back in greed. Options 22. This is back in greed. Back in greed. I'd have to look through these subcomponents. I did notice that this morning, but I didn't understand that because stock price strength should have rolled over a bit more. But putting call options, remember, we have some interesting stuff going on with the options too. The short-dated options are making up literally 50% of the market at this point. It's absolutely insane. I have never seen anything like it in 30 years. Apple breaking down. We didn't touch on Amazon trying to bounce back, but Amazon broke some key support yesterday. What else do we have? We had ConocoPhillips earnings this morning. Let's just peek earnings real quick. There we go. We had Moderna, which guided that the vaccine orders were dropping, and that was a pretty big down. Hey, Crocs was a beat. Plastic shoes are back. Crocs was a beat. ConocoPhillips was up, but still in the consolidation range at its highs. But that was a beat. Peloton down on another miss. Peloton, what was it? Second quarter revenue, they had estimated 868 million, and now they're guiding 700 to 725. Disaster for Peloton. It's got to get down to close to like 1 or 2, and then it could be a takeover candidate. After today, we got PayPal. Lost a lot of its luster, but Coinbase, I know some people will look at Block. Starbucks, I want to see how their stuff's going with inflation services and passing it on to other people. So that's about it today. Let me get back to here. Sectors were pretty much red across the board. Utilities holding up. Utilities and energy holding up the best so far. Here's December Fed watch. Remember, not until December 14th, so we're a ways away, but still roughly 50-50, 4 to 75 versus 50. So that's what we're keeping an eye on right there. And as we already looked at, fear and greed in greed, but I have to look at that closer. So far, the pullback continues overnight. We're getting into the key bounce support zone now. Remember, I will watch for, especially daily cycles getting to the bottom, watching for that bounce and then the secondary reaction. Once we get daily cycles back to the top and weekly cycles at the top, that's where I start really watching for those key reversal patterns for a possible very significant push down. The area for the slightly longer term players to watch for is 37.15 to 36.61. This is a bottoming area. Not only do we have a prior end last Friday, 2 Fridays ago. Wow. Oh. So a week and a half ago, the key low area between there, we also have the 50 to 62 harmonics. And we get right here, we have the return to the neckline. So this is where I'm watching for short-term support for the shorter-term players. The little key area, it is into this clear path move. So to the upside, remember, go down one time frame to help fine tune it, but we're not going to micromanage it that much. The key breakdown level is about 37.59 on any rally. So right off the bat, 37.15 to the downside, 37.15 to the upside. If you want to fine tune things also, great little area to use your short-term harmonics. And between the 50 and 62.5, you have that little level I pointed out. So that's where I will be watching for a potential rollover play today with the declining. I'm paying attention to the declining 1 hour rotation zone since it is overextended a bit. A return to that. The next level would be 37.81 with the 4 hour rotation zone. It's really 37.81 to about 37.90. It's a little zone in here with the 4 hour rotation zone. So that is my next thing. So now, remember, we had a lot of support. We still have a fair amount of support down here, especially in this area between the 50 and the 62.5. You can see all the trading, and there's a substantial volume down here. It's going to take a lot of work in the short term to get through this, and I don't expect it today. The only thing on the radar screen would be if the jobs numbers came out very interesting tomorrow. So remember, until you get a close at least 4 hour, preferably daily, below 36.61.75, I cannot target the lows because we do not have a significant topping pattern yet. The counter trend, now the short-term trend is down, so the counter trend reaction will be very telling and might set up for some major shorts. Let's see. The fear and greed index is a great contra. It's a free indicator, and it's very good at a contra indicator. I don't care if you trust it or not. Extreme fear, you watch for bottoming. Once you in a bear market, you get into greed, you watch for topping patterns. So I would not discount it. I don't see it really booming again yet. When's the next weekday the market is closed? I can't stand doing this 5 days in a row. Thanksgiving is the next major day. Do we have something before that? Somebody let me know. I haven't even looked at it. I'd actually like a couple days off at this point. This has been tiring. Good morning, Rams of Fall. Your comment, too risky at old options overnight calls and puts low levels, in my opinion. So much volatility in the illogical market. Logic is you can play daily open to close. That is, if you're short-term players, I think that's better advice. Anyways, this is this is the toughest market. I think this is the toughest market even beyond, at this point, 2000 and 2008. Because I've been around, again, since 92. This is the toughest market conditions in 30 years that I have ever witnessed to trade. Good morning, Gary. Good morning, Brian. Thank you for tuning in. See? Gary's still getting the shout out for the super sticker yesterday. All right, let's take a look at the NAS crap. NASDAQ, which closed below 62.5 yesterday, just tagged the 75, which is the next logical level. Are we going to see this 87.5 with the S&P still holding up? That is the 10,641 area. I'm going to have to reset some of these other key levels now that I'll do that later. But that's the next key on a major breakdown. The other areas, 10,919, so roughly 10,900, but not getting into anything not getting into anything even more remotely bullish until above about 10,980. Let's check on that with the 4 hour. So there's a little clear path move that we could pop into on the open if it does get some strength. But I'm watching that 1 hour rotation zone. And then on more strength, I'm keying, remember, this 10,980 to 11,000 area. 10,980 to 11,000 is now major resistance. Major resistance over here. And the NASDAQ, unlike the S&P, let me just pop back to the S&P to show something. S&P right in here has a fair amount of support. A fair amount. And as I say, we still have a little clear path, but the clear path slamming into a breakout zone and then into this final candle clear path, you have a lot of support in there. Versus the NASDAQ, still a clear path move and nothing. So there is not, look at this. There are some support levels here, but it's currently trading right at the bottom of this. So we get the push down below this 10.8. You have some minor support about 10,720, 10,700 to 10,720, but not much until this recent low reversal area back from the 13th, from Thursday to 13th. So keep an eye. Remember, shorts on the NASDAQ. The things I will look to longs, first would be the Dow, second would be the S&P at this point. Touching on the Dow real quick. Yeah, there is still a clear path on the move. It is in the daily rotation zone. The next key area is all the way back at 31,450 roughly. And that would be the 37.5 retracement harmonic and the rising rotation zone. Everything else in there, we're sitting against a little key support, but we start dropping below that. We don't have the major support until closer to 31,550 to 31,450. There's not a lot of support in here. So anything you'd be doing, I'd be using the short-term harmonics, just like this. Not the doubles, the harmonics like this. And then I'd be using those on pausing bars to ratchet down. So if I had to look for a level right now off the open, 31,826. Russell pulling back, coming into a big, so the Russell's sort of like the S&P. The Russell coming back into a fair amount of support, and your major support zone is between the 50 and the 62.5, with the flat 200 right in the middle. So I will be watching for support between 1760 and 1731, with my key support area between 1760 and about 1750, 1747. Why there? Not only do we have the flat 200, we have a pretty decent support base in there. We have a couple key lows, prior resistance becoming support validated here. So this is my micro support area. My first area is 1760. We're still going into a single candle clear path from the final end of this move and the breakout zones right around this 50% harmonic. Spiders can take us, since these have been broken down. We'll reset those. The upside on the Mr. Spidey senses. Gap down 371.40. Just overhead 37.5 harmonic. There's not a ton of resistance back to 37.44.88 on any, if it can get more substantial move on. There is not a ton. See, you're going back into, I know we're down here, but you start getting up here. This is the breakdown zone right here. Key support area I'll be watching for on this is between about 37.65. I'm going to 36.9. You can watch 371. 369.25 is my major support area. Why? That's the 50% run up. If I change the color on this, you'll see this is the 50% of this up move. So 369.25 is your major support. Your minor support area would be about right where it's trading on the open, roughly. Right below that, about 371. And then resistance, minor resistance is 372. And then you don't have much resistance on a snapback move to 374.88. So that would be a slight little target to the upside. And then above that's 378 again. The longer term, the key level you're watching for is 364. About 364. That's the closing level. That's the major closing level that you're watching for. The Qs, and again, you can always, if you know the gap harmonics, put on your gap play. The Qs did not close below the 62.5. Yesterday closed right at it. 261.85 is the first support level in the Qs. Below that, you have minor at 260.62. Very minor, and then you have the breakdown to that 87.5 level, which is 258.06. So that's your key levels in the Qs. On any strength, and you still have a gap left behind. The full gap is this level I just said, right to here. The close 260.65. So that's your magnet beyond the 261.85. A lot of people do not ignore this 261.85. because you have a little support ledge in there right before the gap fill. To the upside, it would be the gap fill and return to the 62.5, which is 265.64. And then above there, the next target would be roughly about 267.95, right in front of the 268 number. My head and shoulders confirmed and triggered. Not on. This is not a head and shoulder pattern. This is, remember, you got to have some symmetry in your shoulders. This is not a shoulder right here. Don't try to force a pattern. There'll be a rally pattern, and then for people looking for shorts, there'll be another good short setup. It's just not yet. This would be a short-term short setup, not a long-term short setup yet. Let's check the VIX. The VIX, close to that first target, but popping up finally. The key resistance is right around 227. unless we can really get above 27, not tipping into severe bear mode yet. And we still have the bullish pattern on the table. So, that's really it. The VIX not acting super bullish yet. Sterling, it was very informative watching tick yesterday. I really like that indicator. It helps you out from getting faked out. Yes, it does. Because you get to see the cumulative tick in the broad market that prevents the fake out moves, or more so, it's no guarantee, but prevents the fake out moves in the futures, because you see if the broad market is confirming or diverging from what the futures are doing. You are welcome, Chris. Thank you for that. I got through the spiders. Potential double bottom on NAS 4 hour. No. Nope. This is not a double bottom. Nowhere near a double bottom. And the double bottom is a reversal pattern. It's sloppy on here. Let me look at the. We'll keep an eye. It would actually be on a daily time frame. It would be more so on the daily time frame. You're still reversing this move. We can look at that later, but you're a long way off. It would have to pretty much trigger at this point on the daily time frame above the most recent swing highs. So yeah, there is one. Potentially it is sloppy, but this does not invalidate it. It's just too far off to even consider at this point. Notes after that weird settlement yesterday, because you see the 4 hour notes have pushed down the 4 hour trigger. This was valid on the 4 hour. 4 hour hitting that first and second targets. Going in, the first and second targets were the highest probabilities. The third target into the wicks. So the third target for me is roughly about 109.07. Not only do we have the 87.5 harmonic, which is also now closed below the 62.5, you have this little candle support base from the key closes right here. And then the emotional move away right from this level. So that's the next target on here. On any rally, resistance 109.21. Through that would be back to 110. Dollar index resumed its move. This has been, wow. Resumed its move up. So this, the technical stop still is here. So watch 112.82. Remember, this was not triggered on the weekly, and it was the lower probability since against that weekly rotation zone. So I'm paying attention to the most recent swing down. Why? Because I want to see how it reacts to this 112.62 level. And again, the technical stop for the pattern on the daily is 112.88. But I am watching 112.62 to see how it reacts here today. A close above that, a return to 114. Crude, pausing here. Just missing that second target. Starting to watch for more of a topping area in crude. Running out of some momentum in the short term. Keeping an eye on, it's not a path trend line. This is called a path best fit line. So watching that with the pullback with the daily rotation zone, but this is getting more toppy. It's running out of momentum. The targets are still to the upside in the short term, but waiting momentum. So there's nothing new going on there. What do we have? Tesla. Let me just get to the majors. Tesla's now right below that 62.5. So watch that on a closing basis. A close below there favors a return to these low ranges from the 24th, Monday the 24th. This is pretty much going to take this double that never triggered off the table. Just wanted to point out, keep an eye on stuff, because now with Amazon, yesterday we did not go through this with, we were more focused on Bob and the Fed stuff. Amazon, Yesterday, closing below the major support base. Remember, this was a gap open and then closed above. Remember to check your line charts. You see all these closes here, the closes here. Then look, kaboom. Got the kaboom. So what? I hit that. So we're below the kaboom level. Any rally now, even back to 99, is key resistance. You got a lot of overhead resistance. So Amazon's broken a very key level. Apple, we are open. Gap down. Then I'll look at the futures. Then I got to wrap it up. Today, besides the gap fill, watch today for Apple, 143.04. Why? Close below that favors then the retest of the lows. Then we'd be watching for the counter trend rally and then a potential short setup. Also, 145 is key resistance. Not only do we have the gap fill area, but it's now a breakdown zone. Let me pull off these other harmonics so you can see it. So that would just be a return to this pretty significant breakdown zone. After Apple tagging the harmonic area with the 200, could not get a close above there with the substantial rollover play. All right, let's peek in. I mean, right off the bat, unless we push severely lower, I'll be watching this little 37, 36 area. Tick, pretty weak open. So as you know, I'm watching now the minus 400s and the zeros. The zero would be for potential shift, not to bullish mode, but a potential shift to where we're running out of steam from the downside. The first key area is when we start printing minus 400 for the people's, from my perspective, for the people trying to learn the tick. So I'm just going to check on the second one. I don't emphasize as much in here, but the tick Q, not as negative an opening on the tick Q. This is the NASDAQ combined tick. Why was I looking at that? Because the NASDAQ's been the weaker, and see, we don't have the substantial NASDAQ push down yet. So keep an eye if you're eyeing for the NASDAQ and the breakdown. Watch that tick Q also. On your platform, you can keep it on into another chart. Now, repeated push downs into this area has a lot of selling pressure. Okay, below 1,000, between this 1,000 and 1,200, that is key again on the tick Q. Just like yesterday, you see with the afternoon pressure in the when the NASDAQ was really tanking with the Powell speaky, you got the key push downs. Now these are short-term reactionary patterns, but if you keep seeing repeated push down in there, there's a lot of selling pressure coming in on, you can see it here on the 5-minute. So that's the key area to watch for, really a decent selling pressure in both the S&P and NASDAQ. So you'd be watching those same levels on the tick. But so far, no additional key selling pressure based off the open in the S&P. So no potential little double here. That's off the table. But I'll still be watching now about 37.35 for a little counter trend bounce. Remember, all right, I got a jump now. Went through all the levels. Key overhead resistance. If you're trying to play something shorter term, your 37.60 is key, and you got 10 minutes for some numbers to start coming out, and then 9 a.m. Central for the next numbers. So do not get caught off guard with that. Take a look at the SMH. Then I'm going to wrap this up. SMH now. This is why semis are still in bear mode. 185.67. Remember, They're still in bear mode. Reconnection is where it helps to keep your time frames in order. So what do you have here? On the daily breakdown level. Right here. Remember, long-term sell mode still in semis. The little 2-day pop back to the rotation zone and the prior breakdown, and now they're rolling over. So would I be rushing in on semis, especially with it getting to the top? No, I'm watching for another push down. We might get a bottoming pattern in here, but it's way premature to look at that. You're welcome, Rams of Fall. QCOM. QCOM again. Breakdown zone. Return, breakdown zone, and then move lower. It's below the 200. This is on the weekly. This is the 200 weekly. You do not, I would not, anything would be counter trend, short-term, aggressive plays unless it were to trigger this potential weekly double. Everything, your next major support coming in on the weekly is 95, 96 area. 95, 91, 96. This is going into a weekly clear path move. Your breakout zone is here. This is not something I'd want to stand in front of. Short term, could there be a potential gap play? Yeah. Other than that, nothing. Nothing I want to stand in front of. This is where Mr. Yuck. This is definitely Mr. Yuck chart. There are better plays to the bullish side than Qualcomm. Major overhead resistance. You're welcome, Anissa. You're welcome, Connor. Apple cross trade sell order. Well, we don't know what's going. It's just we know there's a big order there. I'm jumping. Remember what to watch for an Apple. The key closing print. If we do, then they'll use the gap harmonics, the upside. And it's also the key breakdown zone. So, oh, by the way, if you're trying to play a gap fill, I would not do the full close on this because this key gap open is very significant, 148.07. So my first target would be, a gap fill target to me would be around that 148 area. I would not use the full gap fill of, the target would be 148.07. I would not use the full gap fill. Why is that? Sorry. The key close, I was saying open. Duh. 144.80. 144.80 would be, I'd still use the gap harmonics from the close of yesterday, which was 145.03, but my target would be in front of 145.03. You're welcome, Christoph. I shall chat with everyone later. Have a safe and prosperous